Hey there, and welcome back to my channel. This is the Utility Bull, and I'm here to tell you the latest news. As always, this is for entertainment purposes only and should not be considered as financial advice. Always do your own research. So, let's get started and sum up what happened in the crypto world. August 14 to 20. Coinbase Financial Markets has received regulatory approval from the National Futures Association to operate as a futures commission merchant and provide eligible U.S. customers access to cryptocurrency futures trading. This significant achievement underscores the company's dedication to maintaining a regulated and compliant business while offering secure crypto-native services. By gaining this approval, Coinbase Financial Markets becomes the pioneering crypto-native leader to offer regulated, leveraged, and cash-settled crypto futures to customers. This step is pivotal in fostering trust among both individual customers and institutions, enabling broader involvement in the world of cryptocurrencies. The process began in September 2021 when Coinbase Financial Markets applied to the NFU to be recognized as an FCM. The company has worked diligently with regulators to ensure adherence to necessary regulations and align its business model with the customer protection requirements set by the Commodity Futures Trading Commission. This accomplishment signifies a turning point, allowing U.S. customers access to regulated crypto derivatives products. Coinbase Financial Markets and its affiliates are committed to collaborating with regulators to offer products that align with their mission of revolutionizing the financial system using crypto for economic freedom and advancement. This regulatory approval ensures that eligible U.S. customers can securely access derivatives products under the oversight of the CFTC and NFA, fostering a safe and innovative environment for crypto trading within the U.S. Obtaining FCM approval was a crucial stride in establishing transparent and secure derivatives markets, granting customers access to regulated futures contracts. Coinbase Financial Markets plans to provide further details in the coming months on how verified U.S. customers can engage with their futures offerings. The global crypto derivatives market represents a substantial portion of cryptocurrency trading volume and serves as a pivotal entry point for traders. Margin trading offers customers the opportunity to engage in the crypto market with less initial investment. Coinbase Global Inc. acquired Fairx in 2022, now known as the Coinbase Derivatives Exchange, to extend these benefits to investors. The exchange has successfully launched various futures contracts catering to both retail and institutional investors and has amassed a substantial liquidity pool. By choosing to become a public company in the U.S., Coinbase Global displayed its confidence in the U.S. regulatory framework's commitment to consumer protection and the growth of the crypto economy. This recent regulatory approval aligns with this vision, solidifying Coinbase's role as a leader in regulated crypto futures trading for U.S. customers. Let's move on to Mastercard. Mastercard, a leading player in the payments industry, has established a new forum to facilitate collaboration and discussions among stakeholders in the realm of central bank digital currencies. This move reflects Mastercard's influential position in the evolving landscape of CBDCs, as countries globally contemplate the possibility of digitizing their official currencies. While CBDCs are distinct from cryptocurrencies, they share some similarities. Although CBDCs are not inherently blockchain-based, they could utilize blockchain technology, akin to what underlies Bitcoin and other cryptocurrencies. Essentially, CBDCs represent digital versions of established fiat currencies, such as the US dollar, with official backing from the issuing government. Mastercard's CBDC Partner Program has already welcomed inaugural participants, including Ripple, Fireblocks, and ConsenSys. This initiative aims to stimulate productive conversations among significant players in the industry and foster innovation and efficiencies. Raji Damodharan, Mastercard's head of digital assets and blockchain, emphasized the importance of offering diverse payment options and achieving interoperability to ensure a thriving economy. As the world progresses toward a digitally oriented future, the user-friendliness of CBDCs should mirror other forms of currency. Mastercard's history of innovation in the digital asset landscape, particularly within the CBDC sphere, spans a considerable period. Notably, the payments network launched a prepaid card for the Bahamian CBDC, marking the first ever CBDC in early 2021. This move signifies Mastercard's dedication to playing a pivotal role in shaping the trajectory of CBDC. In a notable turn of events, the price of Bitcoin has plummeted by over 10% following reports that Elon Musk's SpaceX has sold the cryptocurrency. This development was revealed by the Wall Street Journal, which disclosed that SpaceX, an early Bitcoin purchaser in 2021, marked down the value of its Bitcoin holdings by a substantial $373 million across 2021 and 22, and subsequently offloaded its crypto assets. This downward valuation aligns with a significant decline in Bitcoin's price, which experienced a sharp crash in late 2021, initiating a period termed as crypto winter that extended throughout much of 2022. Similarly, Tesla, the electric vehicle company led by Musk, also engaged in analogous maneuvers concerning Bitcoin. Tesla had disclosed last year that it had sold the majority of its Bitcoin holdings after procuring them in 2021. The impact of these revelations from SpaceX's financial documents was swift and pronounced, causing Bitcoin's price to dip by around 8%, settling around $26,500. Subsequently, the price has continued to decrease to approximately $26,200. Over the past week, Bitcoin's value has dropped by a significant 11%, descending to levels last observed in mid-June. Moreover, the surge in bond yields has been placing pressure on various risk assets, including cryptocurrencies. The 10-year Treasury yield achieved its highest point since 2007, driven by indications that the Federal Reserve is maintaining a hawkish stance on interest rates. Prior to this recent downturn, Bitcoin had been trading within a relatively stable range for several months as investors awaited potential approval from the U.S. Securities and Exchange Commission for a spot Bitcoin ETF. Prominent financial institutions such as BlackRock had submitted applications for these ETFs. Fundstrat's Tom Lee has posited that a green light from the SEC could propel Bitcoin's value to surpass $100,000. Let's move on. The Reserve Bank of Zimbabwe is on the brink of introducing gold-backed digital tokens into the retail sector. The country has found success with both physical and digital gold tokens, which have served as investments and a safeguard against rampant triple-digit inflation. After witnessing commendable success among investors, the RBZ is preparing to launch its GBDT for public use, aiming to address transactional needs. Having initiated the GBDT project in April, the RBZ has already completed 11 issuances backed by 325 kilograms, 716 pounds of physical gold, as detailed in a recent financial report. As the GBDT shall be scaled up to be used for transactional purposes by the public, the RBZ is advancing toward Phase 2 of the initiative. The bank envisions the GBDTs becoming an alternative to the U.S. dollar in domestic transactions, providing a secure, convenient, and value-retaining medium of exchange for retailers. The GBDT's rollout comes after the successful issuance of physical gold coins last year. These coins experienced high demand from investors, with only a small percentage being redeemed. The GBDT offers the benefits of divisibility and enhanced security compared to physical coins. Zimbabwe grapples with soaring inflation, reaching 175% in June, prompting the Reserve Bank of Zimbabwe to set its interest rate at 150%. Despite the widespread use of the U.S. dollar in local trade, the central bank has been striving to develop a central bank digital currency since July 2022, garnering positive response with 71% of surveyed respondents expressing willingness to use it. The GBDT is poised to serve as a foundation for the CBDC's development as it exhibits characteristics closely aligned with a digital currency. Let's move on to former President Donald Trump, who is currently a presidential candidate and defendant in multiple federal and state court cases, has revealed substantial cryptocurrency holdings in recent financial disclosures. These documents, obtained by the nonprofit watchdog Citizens for Responsibility and Ethics in Washington, showed that the billionaire real estate magnate and prominent Republican candidate for the 2024 election possesses more than $2.8 million worth of Ethereum in a cryptocurrency wallet as early August. Interestingly, these new disclosures present even larger crypto holdings than previous filings. An earlier government document from April 14 indicated that Trump held up to $500,000 in digital assets. Notably, Trump's involvement in the cryptocurrency space extended to his collection of non-fungible tokens known as the Trump NFT collection. These digital collectibles generated licensing fees amounting to $4.87 million, contributing to a total of approximately $7.6 million in earnings from his crypto-related endeavors, as reported by Cointelegraph. Despite his initial skepticism about cryptocurrencies during his presidency, labeling himself as not a fan, Trump's perspective underwent a transformation. If you like the content I provide, please hit that like button and join the channel. See you next week.